He was talking about how copper historically leads the equity market, that you can look at copper just because it's such a base industrial metal that if copper price is rising, then there's demand per copper. If there's demand per copper, then people are building things, homes and buildings and cars and everything else. And since silver is still, as the question came up earlier, still thought of as an industrial metal, then you got to be following. It's at least got to be part of what you're thinking about when you're projecting where silver is going. And copper is going like crazy and has been for 5 or 6 trading days now. So that does bode good things to come, at least in the short term.
Mm-hmm. Okay. Well, Todd, what I've noticed from your technical chart work, it seems you place a good deal of emphasis on trend and channel lines,
mm-hmm.
as well as horizontal support levels.
Mm-hmm.
Okay. Do you ever use any directional or momentum indicators, such as exponential moving averages, percent R, relative strength, rate of change, MACD, or stochastics?
I'm sorry, I'm just sitting here kind of chuckling because no.
Yeah.
I love all this stuff. And I technical analysis, the smaller, more closed market that you can deal with, the more valuable technical analysis is, because it's at the end of the day, it's kind of a self-fulfilling prophecy. If everybody's looking at the same chart, and if everybody says, gosh, it's going to have some resistance at 25, and if everybody and their brother thinks there's going to be resistance at 25, then people are going to start selling at 24.50. And lo and behold, it never makes it to 25, and a week later, everybody goes, see, look, there was resistance at 20. Well, no kidding, really? So there is something to it. So all this other stuff, though it does have value, and frankly, the only time I ever look at it is if it shows up on a chart, and you can look back historically and go, oh, look, when this squiggly line got all the way up to the top, that corresponded with a low. Oh, and that squiggly line is near the top again. That's about as detailed as I get with that stuff. I draw those channels and those lines, and this because everybody's looking at that same stuff. It's the same thing that I mentioned earlier about why it works in the first place. See, there's been a lot of, well, not a lot, but there's been some talk recently on the site about the value of technical analysis in manipulated markets. And why it's a lot. Sometimes it's people that show up just to say bad things about me, which I get a kick out of anyway. But they'll say, "Well, why would anybody listen to this guy anyway?" Because of that value of technical analysis in a manipulated market. Well, what I'd be the first to admit, and this is one of the first posts I ever made, the reason my technical analysis works is precisely because they are manipulated markets. Mm-hmm. Because if you're JP Morgan and you have this concentrated short position in silver, and it is your job to try to suppress the price of silver to your advantage and to the Fed's advantage or to whoever's advantage that you're doing, then what you want to be able to do is at the right time and the right moment set off a cascading sell where you drop some shorts on the market, it triggers some stops, you start getting longs to liquidate, it starts generating margin calls, maybe the CME jumps in and raises margins and makes things worse, okay? But you got to know, you have to do technical analysis to know where is that spot on the chart that has the highest likelihood to have the biggest impact, okay? Mm-hmm. So if you can then think like JP Morgan, if you can think like our friend, the Wicked Witch, then you can begin to anticipate where this is all going to happen. And that's all I like I said, I made it clear from day one, that's all I do. And the only reason that I now have this reputation as being this, witch, soothsayer, is because I have 100% faith, not in technical analysis, but in the fact that gold and silver are manipulated. And so once you accept that, then you can begin to look and say, okay, if I were in charge of executing these trades, where would I put it at? And then you can quickly figure out where the price might turn and head higher or where the price might stop and head lower. It's no more complicated than that.
Okay, Turd. All right, this will be.
Go ahead. I'm sorry.
I was going to say this will be my last question for you then. how much importance do you place on the weekly and monthly charts as opposed to the daily or 4-hour charts?
Same thing. Same thing. If I'm looking, it just depends on the time horizon of what I'm looking for. If I'm looking for a short-term turn, then I'm going to look at the shorter-term charts. But the long-term charts are exactly the same tool. You could pull up a weekly chart of gold and go back and look and notice that gold's been in the same rising channel ever since the introduction of quantitative easing in March of 2009. And if you think, well, if that's not going to change, and of course some people would try to argue it is, but I think that's silly. If you think that's not going to change, then why would gold get out of that channel? Now, it got ahead of itself in August, and that was almost entirely due to short covering on the part of the big banks. And it has since then, once that worked its way out, they managed the price back down. Now it's back in the channel. And it just trades towards the top of the channel, and then maybe 6 months later it trades back down and touches the bottom. But all the while, it's just trending higher and higher, and it's because of the fundamental part beneath it. So I look at those longer-term charts to be wary of, or to be aware of the longer-term trends. Just one last thing, though. A lot of times people assume that, there's some kind of crazy logic or rationale behind one day I'm showing a 15-minute chart or an hourly chart or a 4-hour chart or a 3-hour chart or whatever. Truth be told, I'm showing the chart that gives you the picture that complements what I'm trying to say. To get the proper length of time on my chart, maybe it needs to be 3 hours. And it's not that, because the 3-hour chart never lies. It's nothing like that. It's just simply it fits from a time scale standpoint into what I'm trying to show the reader, as to where I think price is going. Right.
Okay. Well, I get it, Todd. Yeah, I really appreciate it. Thank you very much.
Just for you slurred an R a couple of times, and I don't want anybody to think if someone paying close attention would say, they just spilled the beans. Turd's real name is Todd.
Turd, sorry.
It's not. My name is not Todd. My niece's husband's name is Todd. How's that? If anybody wants to be hey, there you go. But my name is not Todd. It's Percival Sweetwater. I'm sorry?
Can we put an A in there and call it Toad instead?
Toad, yeah.
Toad.
My mother-in-law has a friend who's probably maybe listening to this, who she's Armenian by birth. And so, though she's been in America for forever, and she heard that I was going by Turd, and she had no idea what that meant. So then she Googled the word Turd and found out what it was slang for. She always just thought that was horrible. So she wants to call me Tord for something, because she just can't get herself. She's just this nice older lady now I'm really in trouble, because she's going to hear that I just called her a nice older lady on the internet.
Well, I think we can fix that. We're speaking with Turd Ferguson. Turd Ferguson. Please help support him by visiting his website, tfmetalsreport.com, where you can become a Tordite and help prepare yourself for the end of the great Keynesian experiment. We're going to roll on to our next topic area, which is the future, as if we haven't been talking about it, the future and precious metals. Our first question will actually come from another forum member. We're back to Acorn Sales, but it'll be asked and posed to you by RTG. RTG?
Yes, sir. On behalf of Acorn Sales, she's referring to Jeffrey Christensen's presentation at the Silver Summit.
We have to.
Yeah. Well, she's curious because he originally committed the faux pas, so to speak, by admitting that the leverage, the leverage on LBM, the futures trading, was 100-1, and now he up at the Silver Summit he raised it to 400-1, but said it doesn't matter. And then he claimed.
That's a Keynesian argument right there. I'm sorry, I didn't mean to interrupt you.
Yeah, no, please go ahead. I'm sorry.
Guy, I just can't stand him, but please go ahead.
All right, well, then, okay, so you just consider it a Keynesian argument that 100-1, 400-1.
Yeah, 1,000-1. Who cares? It doesn't matter. If you want
Rock
to take
on.
delivery, you can take delivery. Who cares how much? Okay, Jeff, whatever.
Right. Okay. Then Christensen claimed that that May 1st drive-by, the beginning of May, that drive-by shooting, he says that was caused by a change of trading positions on the COMEX, which it was, of course. Under U.S. commodity law, it is illegal for prices to be set on the COMEX. The futures and options contracts can only be a price discovery mechanism and not a price setting mechanism. Price discovery mechanism and not a price setting mechanism.
Right.
So if paper is oversold, here's the question then. So if paper is oversold either 100 to 1 or 400 to 1, whatever, once the paper fraud is exposed and turns to confetti, how would you expect the physical price discovery to play out?
Well, that's the big question. For a long question like that, as you might imagine, I got a long answer. So everybody buckle in. I'll try to keep this brief. Where do you start? Gosh, one, on the paper explosion, paper turning to confetti. They're going to fight that. They being the empire, the cartel, the too big to fail banks. If they're going to do everything they can to keep that from happening, and so you got to continue to expect manipulation. Now, what's going on with the CFTC and whether they will be able to implement position limits, it's not as important in gold as it is in silver, because silver is such a much smaller market compared to gold. But nonetheless, if we do get position limits actually enacted, then that will change the ability and definitely affect the ability of the big shorts to continue to suppress price. But that doesn't mean that all of a sudden the COMEX will be a true and fair price discovery mechanism, because that's really we've allowed it to be that, but that's not what it's for. That's not what it was intended to be. Now, personally, I'm excited, and I've been talking about this on the site now for months, about what is called the Pan-Asia Gold Exchange that is going to be opening in Southeast China, hopefully within the next 6 to 8 weeks. I was in communication with the gentleman who is essentially in charge of making it happen. He's based out of Hong Kong, and I'd gotten kind of connected with him through the intervention of a turdite, and they're working diligently to get all the infrastructure laid to make this new exchange happen, which is, as you might imagine, a pretty complicated procedure to put an exchange online. But they're going to get there. And in the end, what that will be is a fully one-to-one backed gold exchange that will trade a spot contract or a contract based on the spot price.